Arlan Suderman joining as the chief economist, commodities economist at INTLFC Stone Financial. Arlan, great to have you back here on the show. How bad does this get? Is the worst past us, or is this just a brief reprieve today before we see another panic about storage and inventories?
Well, it certainly has the appearance of maybe the worst being behind us, but you really can't take anything for granted in this market environment until we really have a handle on the scope of demand destruction that's done and how big the surplus supplies would be. So I caution our clients to be careful about putting too much confidence in bottoms until we have a better handle on that.
Okay, what will that look like to you? Is it an inventory number that starts to get smaller? Is it some kind of, it looks like the supply issue, and cuts are not going to do it.
Yeah, we need to see the inventory start to stabilize. We've got another report coming out now as we talk on inventories, with expectations that domestic stocks up another 14 million barrels or so. And we need to get, bottom line is, we need to get people driving again and flying again, and that's going to take time. That's going to be one of the slower parts of the recovery as we look at China and other places that have gone past peak coronavirus. People go to work, but then they go right back home. And so they do necessary driving, necessary travel, but the discretionary is where we really get that demand boost, and that's going to take some more time to happen.
Yeah. So while the stock market has been hopeful and optimistic in its messaging through its rally over the last month and a half, it seems like crude is going to need a lot more concrete evidence about life returning to normal. Is that what you're saying here? Do we need to look outside a window and see people walk around and cars moving? Is it going to be that straightforward? It seems like a pretty good logical case to make.
Yeah, it's kind of, is the glass half full or half empty? If you look at the contango in the market, the deferred contracts have a good premium in them, although not to levels where we were prior to this, but hopeful that there will be a recovery. But right now, the problem is we have this agreement to reduce output by OPEC++ that doesn't match the drop in demand and doesn't even take effect until May 1st. And so we're dumping big surpluses into storage. We're filling up the storage. So we're making it take even longer before this market can recover and before the industry as a whole can recover.
So as the curve stays in contango and looks, at least if the further out you go, it looks something normal, and you still have people willing to pay for oil instead of just the barrel, or to take it off your hands. Do we have any historical precedent for what that means in terms of a return to normal storage practices? And traditionally you'd see, then you go, okay, I get paid to store my oil, I'll sell it later on. But then obviously if you are stuck at the end of this month and there's still no cars out on the road, then maybe we do a little repeat and we have exactly what just happened again.
Yeah, and those who are set up to be able to profit from storage can do so. And as we fill up the storage, and they can hedge against that contango that's in the market, and it's rewarding them for doing so right now. So there's some of that in play as well. But the bottom line is, until we start narrowing that contango to the point where it no longer rewards storage, we're still going to have some problems in this industry, and we have yet to see how many bankruptcies we're going to have. Obviously, a lot of the smaller companies, particularly shale oil companies, are going to be going bankrupt, bought for pennies on the dollar or whatever by big oil companies where they have the opportunity to do so. That, in the end, does make us more efficient, and as that debt is lost in bankruptcy, makes us more efficient and be able to produce at lower levels, more efficient levels. But there's going to be a lot of pain through the industry between now and then.
Who might step up to the plate here? Any thoughts on who's the most poised to store a bunch of crude? I imagine that after what we saw, somebody's got to be looking to arb that and find a profitable opportunity and find a tanker sitting around somewhere or something. Are they all taken?
Yeah, my son was trying to figure out how many barrels of oil he could put in his one-bedroom apartment. But basically all the on-land storage, has basically been accounted for now. We've had caverns, salt caverns in Sweden and other Scandinavian countries that are been rented or leased for storage. Floating storage now, roughly 160 million barrels in floating storage right now. You're really getting creative trying to find anything you can, and we're really running out of options now whether to store additional oil at this point.
Yeah. Arlan Suderman, Chief Commodities Economist at INTL FC Stone, thanks for being with us.